It's only entertainment.
Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. We're going to look at Viridian Capital's report on a cannabis deal tracker, starting with capital raises and 3 fewer transactions and $57.5 million in lower volume than the prior week. If we compare last year's same totals, there's 6 fewer transactions with 3.2 million higher volume. So average deal size was about 28 million this week and 6.7 in the same last year. So there's obviously the Russian invasion in Ukraine. There's crazy price inflations putting some pressure on there. COVID is still hitting some news cycles. All of that creating some pretty disappointing earnings. No news in banking. Obviously, a lot of the pot stocks roll with news on the banking dilemma. There's a delay in the New Jersey rollout, and yet a ton of money. We're going to get into $250 million for a New York acquisition of the very last medical license. There's only 10 of those available. So, $250 million. It's not as much as we've seen, but it's a lot of money. We look at the total capital raise for the first 12 weeks of 2022. It's $1.2 billion, but down 74% from the $4.5 billion we saw last year. Some of those were huge companies, so can't really compare apples to apples. But there's reduced equity issuance. It's down 86% year over year here in the U.S., and then it's down 97% in Canada. So partially compensation for in the U.S. by solid debt issuance, that's up 400%. However, in Canada's debt decline of 93% brought the total debt issuance down as well. So looking at the graph, you see capital raises for the first 12 weeks dominated by U.S. activity. A higher percentage of capital raises came from international locations. And a lot of that is just driven by speculation for eventual legalization. So you're kind of seeing some really stupid numbers, $250 million in New York. We saw Cresco Labs coming into Columbia Care, and a lot of what we've been talking about for a long time with mergers, this M&A and consolidation, as people kind of realize that legalization will be coming. You're going to see a lot more of this. So we just recently saw 2 closed capital raises for $56 million from venture fund round by Good Day Farm, Arkansas. And then there was a convertible debt by Neuropathics. And then here we can see a change in financing environments over the last year. So first 12 months of last year and had 7 weeks when more than $200 million of capital was raised. The dark bars on that are a period indicating that the most of that capital was equity. So the markets were bubbling. They were hoping for federal legalization with the Biden administration, but then realizing that wasn't happening, prices crashed in February. Debt became the majority, focusing on finance after that. And there's only been 1 week with more than $200 million in capital so far in 2022. Most of that was a debt issuance. I think investors are willing to take whatever they can get. They realize the U.S. is the sweet spot. Canada is overplayed in terms of the valuations. Come back down here, gobble them up, and then wait for those stupid valuations to come to light. So capital raise, the decline has also affected some subsectors. Cultivation, the largest sectors, the percentage share of raises has remained stable around 60% over the last year. Looking at performance for multi-state operators with their earnings versus what their expectations are. The majority of multi-state operators reported fourth quarter earnings. And when you take a look at it, the market doesn't care whether they beat or miss. It has nothing to do with fundamentals at all. Really, it's all about legalization, and it's a momentum stock. It doesn't even trade on technicals, really. So the most significant fourth quarter miss for EBITDA is on the left. So the orange line depicts the returns on the stocks from the day before earnings release and the day after with the adjustments. So even as they miss their expectations more and more and they're out of line, The performance doesn't matter. It fluctuates with news, it looks like, more than any fundamentals at all. Let's look at the biggest winners and losers. So 3 Canadian companies were among the 5 biggest winners. There's Sundial and Tilray, Alcanna. MedMen is, I guess their fate is with Tilray at this point. 2 zombies right there. So they've rallied. Canadians have rallied from a reintroduction of the MORE Act into the White House, again, taking that fundamental news and rolling with it. Tilray, the biggest one to gain, kind of a Hail Mary, not really going to go anywhere though. The idea is to kind of try to find when to get in and get out of the market. If you haven't already downloaded the Toro Alerts app, check it out because you'll be able to get notified when to buy and when to sell. It's mostly technical, but there will be fundamental news like mergers where you'll be able to get in and get out. So we made 40% when Cresco and Tilray merged. I would never invest in either of those, but when I get trading alerts, why not make some money? So the largest equity raise happened on March 22nd. Good Day Farm, Arkansas. They raised 56 million that we mentioned. Another public company listing. One of the 2 companies that raised capital were public, trading in the US on the OTC. And then in terms of equity versus debt, equity was 99% for this week, even though we've seen a lot of debt raises recently. In fact, debt accounted for 70% of the last 4 weeks. Because of the price pressure on stock prices, a lot of people don't want to issue stocks, so they're going to issue debt. And I think that's kind of what you're starting to see. Also, investors are going to take whatever they can get at this point because they know, debt issuances have first lien priorities anyways. So property, plant, and equipment, if the company goes bad, they at least have some collateral, even though the valuations you get more with equity. So you're going to see equity prices have a little bit of a comeback recently simply because of what was happening with the banking bill. Pricing and valuation multiples are still low, which is why there's a lot more debt issuance. Anytime you're going to see anything with legalization, whatever, and stocks pop, it's not really going to change much because people are going to want to issue debt since prices are generally going to be pretty low no matter what for the foreseeable future until banking and or legalization comes into play. Big merger like we saw with Cresco Labs and Columbia Care or Tilray and Hexo. Regardless, we're seeing a lot of mergers, a lot of consolidation. And one of the M&A transactions that closed last week with an undisclosed transaction amount, there was 3 transactions the prior year for $332 million. Total M&A activity is barely up. There's been $2.5 billion with 55 deals closed. And the top 7 transactions were over 100 million. So that was 77% of all of the deals. So big deals, big money coming through for sure. So a $250 million that we saw in New York isn't the biggest thing that we've seen. So there were a lot of $800-900 million deals we saw from Select and some of those companies. U.S. transactions, though, they've been a little bit weaker year to date. The M&A transactions are down about 7.5% and 36% fewer transactions. But the average transaction size of 55 million is up nearly 50%, about 45%, and is going to grow more based on Viridian Capital's anticipations and expectations. And so even though we're seeing some of the transactions increasing, the buyers are kind of picking and choosing kind of when they want to get into the game. I think also based on some FOMO. So it doesn't seem like there's long term, even in the private equity, there's fairly quick flips of people just kind of looking to get in and get out with a higher return without really looking to stay in for a considerable amount of time, which tells me there's FOMO without really believing in the companies. And so maybe there's a lack of due diligence. Otherwise, you wouldn't get out. You want to stay in. I mean, imagine getting in at the very beginning of Amazon, for example, and then just selling out really quick. If you truly believed in it, you would stay in for the long term. So, but despite that dip in U.S. Targeted M&As, we're seeing that on a percentage basis, the U.S. is accountable for close to peak of 60% of all considerations. And that's going to be expected to increase through the rest of this year. And a big part of that is just simply the valuation. So Acquisition or M&A activity is going to be based on that valuation gap. So the largest MSOs and the ones that have less than 300 million in market cap are going to be those primary targets. So those are going to be the acquisition targets. So they have really low valuations and they're just going to be picked up from these conglomerates. So last several weeks, we've seen that gap's narrowed to record lows. So that's kind of restraining some of the financially driven deals that we've seen. Maybe some more strategic mergers are going to happen. That Cresco Columbia Care transaction, all stock deal, that's going to be pretty crazy. Maybe the biggest takeaway that Viridian has about that M&A is that it's going to be a catalyst for pricing. So they're looking at that acceleration of consolidation as well. They think that Columbia's management has made a great point that the larger combined entity is better positioned to attract that institutional capital and is going to be the flood into the industry's post-legalization. So they think that the consolidation could take two different forms: an acquisition by one of the larger competitors like Trulieve or GTI Cureleaf, or a merger of relative equals that adds an operating scale. So potential combinations of Jushi or Planet 13, AR Wellness, Forefront, those all kind of big conglomerate mergers could happen. They're still kind of expecting that there will be some big M&A deals in the rest of 2022 to see something similar to this accretive deal between Cresco and Cureleaf, or excuse me, Cresco and Columbia. There's also another M&A, kind of a smaller one with MetaPharm and then Shelter Cannabis. And that transaction involves some royalty payments as well. So they're not going to get all of the intellectual property, which is kind of interesting. So MetaPharm is going to produce Shelter products at its existing facility, requiring a little additional capital spending and working out some kind of, I guess, kind of strategic partnership or whatever. But they're going to do some pre-rolls there. So maybe I'll have to check that out next time I get up there. We'll see.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.
Don't forget to smash that like button on your way out and check out these other videos that we've got.